Hi, everyone, and welcome to this new video. We will be talking about the turmoil in the markets and how to prepare yourself and how also to stay a step ahead of the market. The approach that I will be talking today about is the business cycle approach to sector investing. Basically, the approach will help you stay ahead of the market, try to anticipate economic cycles so you adjust your portfolio before everyone else. So when the market is hit, you are prepared. And when the opposite, when the market is supposed to boom, you are already in the right sectors so you can benefit. Any portfolio needs to be diversified, but sector allocation can be changed to adapt to the economic cycles. And this approach is widely used. I know that investors are focused too much about charts and trading, but charts, they can give you a hint, a week or 2 weeks before. But understanding the economic cycles, you could be ahead of the market a year or 2 years. You just have to wait till the cycle is finally there, and investors who are late in understanding the economic cycle will be hit, but those who prepared, they will be obviously in better position. And as I said, fund managers, whether they are large fund, BlackRock, or all these fund managers who manage billions of dollars, they're using this approach. They're not using charts and stuff. They're using this approach because it's the number one approach to adapt to economic cycles. So, and if for an economy, like the growth cycle starts with an early stage, then we reach the mid cycle or a peak, then the late stage of growth, then we hit a recession. So it's important when you are here to think already about the mid cycle or the peak. And when you are in the peak of your growth cycle, to think already about your late cycle. And when you are in the late cycle, you prepare yourself already for a recession. Now we are kind of in a late cycle of growth, so we have to prepare our portfolio for the recession. And we'll be talking about the sectors that better perform in each cycle, but also we will be talking about what are the description and what's going on in each cycle. At an early stage of growth, the activity starts rebounding. Remember, now we're anticipating the early stage, so we are in a recession. We will start noticing that the activity starts rebounding, GDP goes to positive territories, employment starts improving, income is there, and businesses are starting to ask for loans so they can invest, and profits are growing rapidly, and the monetary policy is still stimulative because the economy, the government is trying to help the economy, and inventories are low, but the sales are improving, and this will indicate to businesses you better start buying more inventory so you can sell more because the market is changing. So in an early economic growth cycle, the businesses or the sectors that will outperform are consumer discretionary, industrials, and technology. Industrials and technology at a lesser end, but consumer discretionary is the number one sector that will perform. So if you're preparing for an early stage, you have to invest during the recession in consumer discretionary. The next stage is the mid or peak. Remember, guys, economic cycles can take years or they can take months, which was the case with COVID and the pandemic. It was really short cycles and it took everyone by surprise. But usually, economic cycles take years. When GDP starts slowing or growth starts slowing, it takes years before it picks up. So, if let's talk about the mid or peak. We lived the mid or the peak last year. The growth was peaking, credit growth was strong. Everyone is taking on loans because to invest because the economic activity is there. Consumers are confident, profits are peaking, and we noticed this with tech and policy. The government policy at that point, the monetary policy is neutral, and inventories sales are growing at a very fast pace. During this economic cycle, the sectors that will overperform our information technology, our technology, tech stocks, and we've noticed this last year. I mean, tech stocks were skyrocketing, and communication services and health. So these three sectors will always outperform during other sectors during a high peak uh, economic cycle of growth. Why people are not investing in these? They're still making a profit with these, but the problem is there's much more profit to be made here. The blue here is the average, the green is the median. So they're still making a lot of money in these sectors. So all portfolio managers, all individual investors, they will move towards uh, obviously sectors that can provide them even more growth, more profit. So that's why technology will outperform everyone else, every other sector during a peak of economic growth. So what happens later is we are going to, after we reach our peak, we start going to the late stage of economic growth. And this is what we are living right now. The growth is starting to moderate. Credit is tightening, so it's harder to get a loan. And earnings are under pressure. We've seen this with Apple, with all the big tech companies during their Q1 um, statements. They were saying we had a strong Q1, but we're not even sure about Q2 and Q3 and Q4 if the sales will keep going up or no, because we're not feeling that the market or that the economy will provide more sales where people were going to buy more. So businesses are starting to question the rest of the year and 2023, and this is a sign that we are headed towards a recession. Policy is the monetary policy will be more strict. I mean, at that point, the governments will start raising interest rates, and inventories will grow because sales were really good during the peak. Now they are starting to fall, but businesses have a ton of inventory that they need to sell. So we're starting to notice this with large corporation, and the general sentiment is that they're not feeling that the numbers they had last year will repeat themselves this year, and this indicate that we are in a late stage of economic growth, and so we have to prepare ourselves for a recession. During a late growth stage, the sectors that will outperform are energy, healthcare, and utilities. Utilities is everything that's electricity, gas. So these are the sectors that will perform well during a late stage of economic cycle, and we have these sectors have are performing right now really well if you look at the market, and people start to reduce their investments in tech stocks and consumer discretionary and communication. After this, we are headed directly towards a recession with falling activity. No one is taking loans to invest because basically the economic activity is not there. Consumer buying power is not there. Profits are declining, and the government monetary policy starts to ease a little bit. Inventories and sales are also falling, so we are definitely in a recession. And during a recession, the businesses or sectors that will outperform are consumer staples, utilities, healthcare. And guys, we are in the late of cycle of growth, and we are seeing already that portfolio managers are moving their money towards consumer staples and utilities and healthcare. That means that they are a step ahead. And you will notice here for the past year, consumer staple is the best performing sector or index within the S&P 500. That means that they are already starting to think about the recession. We are in the late cycle, but they are already thinking about what's going to be the good move during a recession. So before individual investors and people who like charts realize that we are already in a recession, they are already positions well, because at that point people will start buying safe stocks, and consumer staples there is the safest stocks that are out there in terms of everyone needs to go to shop for groceries. So consumer staples is basically a must have. You have to buy it. Utility is the same thing. You have to pay your gas or electricity whether it's a recession or no. Healthcare is with us whether we are in a recession or no. So these sectors, they've already positioned themselves. This is why we're seeing the good numbers of since 1 year performance. And for 5 years, this is the numbers where we were in a peak growth. So tech were doing well. Healthcare here is just because of COVID. It had a great performance. Consumer discretionary and tech, as I mentioned, during peak growth, they are doing really well. So the purpose of this video is just to make you realize that you have to prepare all the time the next cycle and rearrange your portfolio. I'm not saying that charts or short-term trading is bad, but you have to keep in mind when you're building a portfolio that the economy has a huge impact on your portfolio. So you have to try to familiarize yourself with economic concepts and cycles and economic cycles so you are better prepared. And remember, these large fund managers, they are following these steps. So uh, whether you like it or not, they own a lot of money and they will move the markets towards these. Once they feel we're already at a late and we're hitting a recession, they will prepare their portfolio way ahead. And so if you are doing the same thing as they are doing, you should be able to have a stronger portfolio that withstands the economic cycles or the bad news that are coming towards us. So I hope this video helped you understand a little bit the cycle, the economic cycle approach, and we will apply it hopefully in your portfolio. If you like the video, please don't forget to like and subscribe, and visit my blog also for additional content. Thank you very much.